So in the overnight session, buyers maintained control and we saw a push up into the 56 12.5 to 22.5 resistance where responsive sellers were active on first test. Now heading into the open, our intermediate term bias will be bullish and our short term bias will continue to be neutral, because even though the market has been quite strong over the last couple of days, we now have better resistance overhead. It's also a Friday, we're heading into the weekend. We have rollover on Monday and then the Fed announcement next Wednesday. So overall, it just seems like it's going to start to become more and more difficult for the market to continue to head higher. So given that it's a Friday and we have rollover on Monday, the market could be more choppy and two-sided today. We've already seen volume drop in the overnight session. So for example, tonight, the market has been running on 50 to 55% relative volume. And if that theme continues into the open, then it could limit the range potential and it can affect the overall character of price action and make for a relatively choppy and two-sided day. Now heading into the open, we have pre-market support at 55.94 to 56.03. Holding above that area would be a sign of stability, while a breakdown below it would be an early sign of intraday weakness. And on the upside, we have pre-market resistance at 56 12.5 to 22.5, and a break and hold above that area would serve as an intraday bullish indication and can result in a test of the 56.30 to 33 area and the initial resistance zone at 56 35.5 to 45.5, where sellers can be active on first test. I would also keep an eye on the Nasdaq. NQ has resistance at 19,509 to 542, followed by better resistance at 19,644 quarter to 694 quarter. So if NQ is running into its own respective resistance as ES pushes up into initial resistance or even higher, then it would increase the odds of sellers stepping in to both markets. Now, in order for the market to put in a breakout, even above the pre-market resistance zone, we will need to see continued broad market strength and sustained upside momentum, with NQ also breaking higher. So we'll need to see signs of initiative buying in order to even get a breakout above pre-market resistance, but especially in order to get a breakout above the initial resistance zone, and a break and hold above initial resistance would serve as an intraday bullish confirmation, and that can then bring the 56.4975 to 52.75 area into play, as well as the strong resistance at 56.5875 to 69.75, where there is a high probability for sellers to step back in. In the event that the market fails to break out, or even if it breaks out and then finds sellers at initial resistance and then comes all the way back down, and we get a breakdown below pre-market support, that would be a sign of weakness, and it can result in a move down into the initial support zone at 55.7075 to 80.75. That marks yesterday's intraday breakout area, so buyers can defend there on first test, and a break and hold below initial support would serve as an intraday bearish indication, and that can then result in a test of the 55.5275 to 57.75 area, where again buyers may be active on first test, but if ES is selling off on excess weakness and big and sustained downside momentum, then there would be potential for ES to head lower into 55.4575 and yesterday's low at 55.32.5 to 40.5, where again buyers may be active on first test, and the lower the market pushes, the higher the odds of buyers stepping in. Now, if the market continues to run on light volume, then we may not get a big move one way or the other. So if ES continues to run on 50 to 60% relative volume, then in the event of a bullish day, we may just get a push up into initial resistance or maybe the next zone. And in the event of a bearish day, we may just get a push down into initial support or 55.5275 to 57.75. Given that our short-term bias is still neutral, we need to remain flexible and open to the market moving in either direction, and we have to be much more mindful of the real-time intraday situation. Remember, anytime the short-term bias is neutral, the ability to read the market in real time becomes much more important. And if you struggle with that, or if you can't really make sense of which side is being dominant in real time, then it's best to either stay out of the market in this situation or wait for ideal trade location. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market support and the pre-market resistance zone. That can provide us with an early indication as to which side is in control on the smaller time frame, and we'll take it from there.